please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. Welcome to Midcap Radar. I'm Samira Abdi and with me is my colleague Prashant Nair. Well, for the market, it looks like we're pretty much near the lows again. So about 35 points gone on the Sensex. The Nifty trades close to that 11,550 odd mark. But it's the mid-cap space where you really need to keep your attention today because we've seen big casualties over there. And as we speak, the mid-cap index is at the low point of the day. So about now almost 1% and 7/10 gone on the mid-cap index.
Oh, absolutely. And I think, otherwise, not very much to report in terms of what's going on. It's been a pretty, sedate kind of a day. Yesterday also, I mean, it didn't look like it would turn into this big waterfall kind of move by 3:30. It did, and all of that picked up by about, 2:30 or so. Last 1 hour was pretty crucial. So let's see if, that similar kind of thing repeats today. But 11,557, we're down about 25 on the Nifty. Those are the top stories. Ashwini is back with us, as always, on the top of the show. Ashwini, thanks very much. Anything changed as far as your stance goes, or you still have the view that, a meaningful cut is likely?
Well, the waterfall is warming up again. I have three things here. One is the USD INR, crude, and the bond yield. And everything is going in the adverse direction. So my sense is that you'll again have a last hour sell-off because a lot of people are still long who are expecting there'll be a pullback, etc., etc. Now we're in that sort of phase where the knife will just keep cutting through the butter and you will not get those fancy pullbacks for people to exit. So this market is more and more trapping people who are stuck on the upside, who are looking to get out. So my sense is you can easily do 100, 150 by the time you close on Bank Nifty, even more. And I think Nifty should break the morning's low and possibly 11,550 is gone. I wouldn't be surprised if 11,500 is also taken out. The junior Nifty is now down 650 points. So this is going to look like a fairly strong move on the downside. This is not your consolidation type correction. This correction seems to be a trend in itself. Having said that, Sun TV is a sell with a stop of 748, target of 725. RBL Bank is a sell with a stop of 615, target of 590. And HCL Tech is a buy with a stop of 1055, target of 1100.
All right, Ashwini, thanks very much for your trading ideas. Here's some more market opinion that's coming in. We caught up this morning with Arvind Sanger of Geosphere Capital Management, who says that the market has had a great move in the current quarter so far, adds that rising oil prices will lead to a rise in India's current account deficit.
Markets really had a great move after this quarter. So I think some of the good news in the stock, but we would be buyers of selective sectors, right? We've liked for a while, things like infrastructure. That spending is going to continue. We like some of the sectors we've liked for a while, like cement. We also like things that have not moved much, like the hotel industry, which is seeing strong fundamental growth. So more on the mid-cap side. We like some of the banks that have lagged. The ICICIs and the Axis banks have come back to life, and that's interesting to us. We are getting more and more intrigued by the real estate sector. Emerging markets currencies, falling like ninepins. Obviously, the two most extreme examples right now are Turkey and Argentina. But all of that it does create headwinds for the Indian rupee. So I don't think that we can say that just because it's got to 71, all the bad news is priced in everything is hunky-dory, because it depends on both global fund flows and to the extent that they are being negatively kind of impacted in terms of emerging market contagion fears. Oil is going to continue to climb because Iranian curtailment of exports is just beginning. And as that continues to build, there's a risk that oil could get to $85. It got to $80, about a month ago, and then pulled back quite a bit. And if it gets back to, it's already almost back to those levels. And if it continues to climb, then the current account deficit challenge is going to get worse, not better. dedicated India funds run by fund managers, hedge funds mostly are impacted. Those are the people who are dedicated to investing in India, whereas the global funds, which are much more apt to go in and out into different markets depending on conditions, are not impacted. So it depends on whether you want to discourage dedicated money and only have capital flows from fund managers who are globally oriented and could move from one market to the other. If the objective is to discourage dedicated India fund, then this is a perfect strategy.
For now, let's head back to IIFL's Invest India conference in London. David Cornell, the CIO of Ocean Dial Asset Management, now joins in from the venue. Hi, David. Thanks much for joining in. EMs have, been off the radar. What's your take now on Indian equities, especially since you run an India-focused fund itself?
The answer to the question is it varies from sector to sector and from market cap to market cap. So I think investors across emerging markets are generally very nervous about the risk of contagion spreading from Turkey or from Argentina to the broader EM universe. And those risks or those concerns are to a certain extent compounded by fears of an ongoing trade war between the US and China, and more recently, obviously, in the renegotiations of the NAFTA agreements between the US, Mexico and Canada. So there is a broad kind of risk-off, you can say, attitude towards EM generally. But I think in the case of India, I think that's creating an opportunity, because what we're seeing in India right now is a lot of the work that Mr. Modi and the government have done in the last 4 years is starting to filter through into better GDP growth and into better corporate profitability.
David, what levels? I mean, are you expecting rupee to remain weak, get a lot weaker? What's your sense here?
So I think dollar rupee could continue to weaken, from here. And it seems to me that the message from the government and to a certain extent from the central bank is that they're quite happy for the rupee to weaken a little bit more. Exports will benefit from that. And to a large extent, the performance of the rupee over the last 4 or 5 years has been jolly good, and some correction is not only healthy but also inevitable. And I think it's the volatility that is more of a concern than the overall correction. So some further weakness in the rupee should be expected, in my view. I think it's obviously connected with stronger oil and connected with a stronger dollar, and connected with US bond yields, gradually moving back up towards 3% and perhaps beyond. And so we shouldn't be surprised by that, I don't think. But the government has, the FX reserves the country has are quite substantially higher than they have been for a long time. Certainly, in 2013, when we went through the taper tantrum, the country was in a much less stable situation. So I think the market will be able to cope with that rupee weakness.
Consumption or investment cycle upturn, what are your themes?
So we're very agnostic, I think, about where the returns from the portfolio are generated from. We're looking for companies with a long-term proven track record of generating meaningful returns for shareholders over time. We're not particularly fussed where that comes from. We like to invest in businesses that we understand, businesses where the management understand the relationship between the balance sheet and the P&L, so we're not chasing growth for growth's sake. And we want to buy with a margin of safety in our purchase price that lets us sleep well at night, literally speaking. Consumption is obviously a key part of that, but the valuations are, in some areas, way beyond what we would consider to be fair value. And so we're very cautious about meaningfully adding to those kind of stocks in this kind of market. And I think that, as as things evolve, I think the market will generally start to move away from those quite expensive sectors. We're seeing value in other areas of the market. We like pharmaceuticals. We're starting to like them a bit more because of the currency weakness, because of the changes in the way approvals are coming through. Obviously, IT's been a strong performer for us, some areas of the financial sector as well. So we're very agnostic, providing the bottom-up specifics on the companies look and meet our investment criteria.
David, given the run that we've already had in Indian stocks at an aggregate level, are you an incremental buyer, or would you wait for consolidations and pullbacks to get in from a longer-term point of view?
So I have no hesitation about recommending India to our investors on a 4 to 5 year view, even at current levels of the market, but specifically in the small and mid-cap area rather than in the large cap. We see more value there, we see more growth, and we see plenty of opportunities over the longer term. In the short term, I think it's very hard to make a call, and we're not market timers. We're not seeking to try and time the market at all, rather to try and find, attractively valued companies with interesting growth prospects managed by people who have a proven track record of delivering decent shareholder returns.
All right, David, thanks very much for your thoughts. In fact, this macro theme actually continues to dominate discussions through the day. We caught up with Jahangir Aziz earlier. We also spoke with Abhig Barwa of HDFC Bank. And, the general consensus, at least when we spoke to Jahangir, he had said that there is no other option now but for the government to actually bring growth down, to actually try and contain the deficit. Abhig Barwa also, when we spoke to him, said that the rupee is currently, he says, trading at its fair value.
I mean, there are two sort of separate things that are happening at the same time, right? There is the internal dynamics in India and what's happening in the external front. So if you look at, what was happening at the external front from April, let's say up to sometime around end of July, I think that was, dollar tightening or dollar appreciating, global financial conditions tightening. And I think that the emerging markets, including India, all reacted to that by letting their currencies depreciate quite a bit, do some sort of an FX intervention, but hardly any interest rate hikes. What is problematic of India is how that growth is being financed. Whatever uptick in investment that we've seen over the last couple of quarters is not getting funded domestically. It is getting funded abroad, which is why the current account deficit is widening. In a situation like this, there is no other option but to bring down the current account deficit by the old-fashioned method, which is by reducing growth.
It's very difficult to predict, some kind of a level of the rupee at this stage. We are in the middle of a crisis, and unfortunately, I think we don't seem to sort of put adequate emphasis on the fact that it is a crisis. So I think with the rupee in free fall and the consequent, impact on inflation, coupled with the fact that we have bunched up paper supply coming in, I think the possibility of yields tightening further is there. I think even if you go by, the most crude RER calculations, between 71 and 72, you're roughly close to the fair value.
Midcap index has taken a further hit, so now about 420 points gone on that one. The Nifty Bank is trending weakish as well, so 300 points gone over there. And the frontline indices, when we started the show, they were pretty much along the flat line, but now look at it, it's 100 points lower on the Sensex. The Nifty is down about 0.5% almost at this point in time. And look at where the maximum pain is coming through. So it's some of these biggish stocks. So look at M&M. That has taken a further hit. The likes of Ultratech, there's Titan, and of course in terms of the heavyweights, there's a lot of pressure that has been coming through from HUL and ITC. So together, those FMCG majors, just the two of them, are taking away almost about 12 odd points from the Nifty as we speak. HDFC Bank, Asian Paints, ICICI Bank, IndusInd, these remain some of the other culprits. There are just very few stocks which seem to be doing well, and amongst that remains the IT pack. So TCS remains the big winner for the day. And if you look at the contribution chart, TCS and Reliance seem to be the two stocks that were keeping the market from going under. And of course, there's Infosys as well to that list. Other than that, pretty much everything looks to be giving way now. And Prashant, as we speak, the mid-cap index continues to aggravate its losses.
Looks like it. Let me just actually quickly pull that index up.
And the rupee has slipped again, so perhaps that's where it starts.
And it's showing up on the Nifty very quickly, right? I mean, as you pointed out, so 54 points lower now on the Nifty. So yeah, I mean 11,530. So this is actually the day's low now on the index, and look at the sharp slip that we actually have as we speak. I mean, so the previous low was at least, I mean, I think it was about 11,560 or so. So this is very, very sharp and very, very fast. Something which we were sort of speaking with Ashwani as well about just a while back. Maybe we should, I mean, if he can, have Ashwani back with us to just give us a quick comment in terms of what he makes of it. But we're down 50 points and it's come through quickly. Ashwani, we didn't have to wait for the last hour, although it's 50 points, but it's come extremely quickly.
See, that's what a trending market does, that towards the close it tends to accelerate. And this is very different from the kind of corrections people have seen where, you know, a few sectors go up, others come off. But the way this, you know, crude is going, it's now at 78.70. You are like $1.30 away from 80. So I think the market will worsen from here. It will break 11,500. And then, you know, the panic will really set in. Now your Nifty Junior is down 800 points. So forget about recovering to previous highs. I mean, the way it's come off, I think by today's afternoon, you will start to see margin calls, etc. Because a lot of stops were in this region, 11,530, 550. And those start to get taken out. So the complacency which had set in the system, that's likely to get taken out. And given this macro style move, you know, not too many pullbacks will sustain. So if people are losing money, get out of the way, because this looks like it will get worse.
It will get worse. Actually, Lata is also here in the studios. Lata, I mean, the rupee, I think it's almost immediately, the dollar rupee went to 71.30, the Nifty sold off. So
yeah, actually, I was also a little surprised, but, you know, I think the Reserve Bank, came in and offered a lot of dollars early in the morning at about 9:20. We went to 71.36, and then we saw the rupee, the dollar weakening back to about 71.14 or thereabouts. At one point, we were in the green in terms of the rupee, but clearly the second bout of dollar buying has started. Usually we call it when London opens. If you remember, you know, this is a traditional market way of saying. So looks like now it is real buying of the dollars, and the Reserve Bank usually does not come in when there is a genuine demand. It's only when they think speculators are taking the move beyond what is warranted by demand do they come in. So this second fall is something you should be a little more worried about. But again, as I saw a tweet, very interesting tweet, don't call it a free fall. This is adjusting to macros. We were very stable for 4 years. So at some point, the adjustment comes with a thud.
And similar, I mean, I think you could transpose that commentary onto stock market as well, because I mean the Nifty also has been such a huge outperformer just this year. I mean, relative to everything else, all other markets in Asia. So
you can't forget the August contract was 4.6% higher.
So there is some correction at some point which will come, and it's hitting us now. So almost 100 gone yesterday, 50 now as of now. And Ashwani was pointing out that maybe it'll get worse before it gets any better. But Sumaira?
Yeah, speaking of thuds actually, so UPI transactions, I mean, it looks like that number has now snowballed and are actually exceeding credit and debit cards in volume and in value. And that is actually something we've picked up from a Credit Suisse report. Lata, what more do they have to say on this?
Well, actually, I think it's startling even to know Credit cards have been around for some time now. I think they made their presence in India itself in 89 or 90 and really caught on perhaps in 2000 when ICICI Bank made it absolutely affordable, packed it along with their savings accounts. To think that UPI transactions have beaten credit and debit card transactions when UPI is just, what, 2 years old. It got a fillip during demonetization, but it was launched just around that time. So I think that itself is a seminal achievement. And then the Credit Suisse report goes on to point out a lot more. It says...
This is number of transactions or value? Both?
Both. It says in value and in volume, it has beaten transactions. So I'll just read out some numbers. Transactions in August, UPI transactions were 32% up month on month. And the overall number is now 312 million, which was 17 million a year ago. Then in value terms, they are up by 18%, again, year on year. Annualized run rate now is about $100 billion. The UPI transactions, of course, now exceed both credit and debit cards in both volume and value terms. Card spends themselves are increasing at a fairly healthy trend, actually 30% as of June 2018. So cards are growing and these have beaten card transactions. The payment to merchant, what they call P2M transactions, are now estimated at 60% of the total transactions, which means many merchants are now taking payment on UPI. And of course, P2P transactions, the average ticket size is 1650, which is exactly the average ticket size in debit card. So it looks like it's almost playing the role that debit cards have been paying. And the report goes on to say that it got a big fillip because of PhonePe, Paytm and Google Pay. And now Amazon and WhatsApp Pay have not even begun. So when that begins, they expect all their, forecasts to perhaps look conservative. They had forecast that $200 trillion worth of transactions will happen in UPI by 2023 or something. Now they think that that will be achieved much earlier.
Lada, thank you very much for that. So, I mean, that's encouraging news for transactions.
Encouraging, and I would think a big deal for retailers. I mean, India is so comfortable with electronic. I think it's very positive for all retailers.
Correct. Absolutely. Absolutely. Okay, my colleague Rituparna is sort of in conversation with Ajay Singh of SpiceJet. Let's listen.
Today we saw some issues being raised by the airline industry, including sustainability of carrying forward this price war. Where do you see this heading, and how sustainable is this? How long can this be sustained?
Of course, it's not sustainable.
Right.
Fares need to increase, yields will have to be increased, airlines will have to increase ticket prices, there's no question about it. At the same time, we need to ensure that costs of Indian aviation come down. It's incredibly important that we have a level playing field with our peers around the world, that on top of the increase in oil prices, on top of the depreciation in the Indian rupee, both of which are making aviation unsustainable. We are also adding a string of taxes and duties on Indian aviation. I think that needs to be reviewed. We have requested the government to review it. We are hopeful that some of those costs which have been imposed on airlines can come down. And at the same time, airlines themselves will have to increase yield. Airlines will also have to adopt new technology, much as SpiceJet is doing with its MAX aircraft, which inherently is are better designed planes which will save fuel burn as well as engineering costs.
So we have seen many of the competitors actually, announce many schemes of late. Will SpiceJet also, do the same thing, announce more schemes, bring down ticket prices, or do you think you'll be holding on to the position because your yields are actually, are better than industry standards as of now? So will you continue to hold on to this?
Well, SpiceJet believes that we first need to be profitable, and we have tried very hard to improve our yields. In the last 3 years, there has been a consistent trajectory of increasing yields, and today SpiceJet's yields are amongst the best in the market, probably the best in the market. We will try our very best to keep up the yields, and we expect that rational, business behavior would be that most airlines will try and make money, and therefore will try and increase yields.
So by when do you think that airlines should take forward whatever you were talking about, sustainability being the main focus here, how long can we hold on to this?
I think the sooner the better. I think certainly you will see an increase in yields as better season starts in October. I think you will see that airlines will raise fares because demand picks up, as you know, in October and carries on for a few months after that. So yield should improve, but I think strategically, tactically, it's extremely important for airlines to increase.
And taxes on ATF. This is one again issue was raised this morning by IATA. How critical is it?
It's critical. It's critical. Taxes on ATF accounts for about 40% of ATF cost. That's clearly unsustainable. As happens around the world, we need that ATF is brought under GST so that we can get input tax credit for ATF. There is practically no country and no airline in the world which has to pay taxes on ATF, which is not creditable. So I think it's time that India follows what's happening around the world if India needs to be an aviation superpower.
Last question, sir, on Udan. How will SpiceJet, are you planning to scale up your participation in Udan?
Of course, for sure. We are now flying to 6 or 7 stations. We are flying to Porbandar and Kandla, to Pondicherry, to Jaisalmer, Adampur and Kanpur. So pretty much all the routes that we started in, that we took in Udan 1, we are flying them now. We've started deployment. Very good response. Very good response. We've started deployment on the Udan 2 sectors. We will be starting very soon flights to Pakyong. In Sikkim, we will be starting flights to Hubli and several other destinations which are, Udan 2 sectors. And we are very happy with what has happened, and we will certainly participate in the future. We will be flying in excess of 25 Udan destinations.
Thank you so much for joining. See you.
Okay. The last bit was interesting. He said, but that's to be expected. As festive season kicks in sometime in October, fares will go up, and that will be seen across the industry. So that is for investors in aviation stocks, not just SpiceJet but others as well. That should be coming in as good news. But I think it's seasonal, as Mr. Singh also pointed out there.